For those of you who are new, this is my brief bio. And disclosures are very important. I'm going to go through specific trade ideas. So if this is the first time you see these disclosures, I encourage you to visit optionscreening.com so you can understand the risk associated with trading stock or options. So let's take a look. First, let's look at the stock forecast toolbox. Our main model runs every day, provides you prediction for stocks that are outperforming the market. It gives you support and resistance level. Today, model predicted 655 to be support, 665 to be overhead resistance. We closed right at that level. So model is doing a good job to give you predictions for low, high, and also trends. It sees 658 to 662 in the next couple months, but then still bull market can resume and make new highs in the next 3 months. For now, we're kind of in consolidation. You can see based on the tariffs last week, escalation in tariffs, government shutdown, you can see that spiders had a pretty sharp sell-off on Friday because, again, we're talking about positioning. There is not a lot of hedging, especially in October. We have October expiration. And then after October expiration, we could have another wave of volatility if there's escalation in tariffs that are 100% tariffs supposed to take place on November 1st, unless there is a agreement with China, between China and the United States. So still high level of uncertainty. Market trading in the box between 6,700 and 6,550, right? That's been the box where the market has been trading. We briefly touched above 6,700, got rejected, closed at 66.71. 10-year yield, no new signal, but sitting on a key support, important support level. I would watch a breakdown in yield. That could trigger a new wave of volatility. VIX is still elevated, closed above 20 again. So still elevated VIX, and Bitcoin. If you look at the Bitcoin as a proxy for risk taking, similar to yield, it's sitting at the important long-term support. If there's a breakdown in Bitcoin, breakdown in interest rates, a 10-year yield especially, and 2-year yield, then I would assume that equity market will follow. For that reason, I'm hedging. The trade of the week was the QQQ put spread. So if you have exposure to the market, especially you have a lot of long positions, then I'm buying 560, buying 580, selling 560 put spread, debit put spread. So it's a debit put spread where I'm hedging in case spiders and QQQ break below 50-day moving average, below 50-day moving average to hedge my portfolio. So that's trade idea would be a buyer into sell-offs, right? Buyer into rallies, or sell into the rallies, or buy on dips, right? Buy on the dips or sell into the rallies, and be market neutral to this point. We do have next Tuesday, we have a webinar, 12 o'clock Central. Please join me. We're going to talk about current market conditions, earnings season, right? The earnings season started, banks are doing pretty well. Airline stocks doing pretty well. So we have a, kind of a tale of two cities, where on one hand we have tariffs and geopolitical uncertainty. On the other hand, we still have strong earnings season that just started. Thank you very much and have a great day.